guys, welcome back to the Capital Mindset Show. Just in case you guys were wondering at the start of this video, the reason why I'm dressed like this, I'm about to go on the water. So I decided to make this quick video before I do that. And it's going to be covering Honest. I promised some of you that I would cover this company. I'm also going to be covering Adobe because I also promised some of you, as well as a video gathering certain individuals' opinions about whether or not we're going to get into a market downturn or not. All right, so getting straight into it, we're going to cover the video real quick that we talked about in the past, or kind of showing a little bit about what we already said about this company. And it was published October 2nd, 2021. The price was $10.74, as you can see right there. This was published back when the channel was much smaller. And if we take a look at the recent price action, it has done terribly over the 1 year. More recently, it's down about 22%, I believe, because of the recent earnings call. And we'll actually talk about that in a second. But the concerns back then were simply that the company hasn't executed anything yet. It was just full of potential, but not necessarily anything substantive. And if you had purchased it since IPO, I feel very bad for you. If you had purchased since we made the video, I feel also very bad for you. However, we'll actually take a look, and the purpose of the video is to make sure, has the story changed? Has the price action actually made it so that we are de-risked in some capacity? And we'll actually answer those questions throughout this video. All right. So taking a look first at the filings, I want to take a look real quick at the income statement to kind of see the growth rate, right? And we notice that it is slowing down. It's not very high growth for something that is priced for high growth. A concern that I'm going to have is whether or not they're able to keep down this cost of revenue and not allow it to grow at a faster pace than the sales. And then that will show me that they're not really scaling very well. But for the time being, we have yet to be seen. That has yet to be seen, really, whether or not they're capable of doing that. Okay. They have cited in their earnings call some inflationary pressures that are showing up. And then we're going to see, as a business, are they able to manage those pressures going forward? Going over to the balance sheet, I want to actually take a look to see if they're well capitalized. It appears as though they are in terms of cash versus how much debt they have. And if we actually take a look at the long-term debt, you actually don't see any long-term debt line item right there because they don't have any long-term debt, but they do have lease financing obligations and other long-term liabilities. Okay. They don't have much goodwill, which is nice relative to what the assets are reported on the balance sheet. So that's nice. Property, plant, equipment, about 52. So that's a decent amount, and nothing too crazy. Right over here, we're looking at the cash flows. They have negative cash flows since 2019, and actually it's getting worse. They're actually bleeding more and more cash, and we can actually kind of tell between, okay, so accounts receivables contributing and inventories. Okay, so inventories was negative in 2020, prepaid accounts payable. Yeah, it appears that they're actually recognizing a higher net loss, and that's actually contributing higher to this. But it kind of evens out between the non-cash expenses and the cash expenses being added and subtracted. So it ends up being almost close to the net loss here. And then we also have, of course, the CapEx down here, but that's fine. All right, so on that note, let's actually go over here to the investor presentation, which is hilarious because it says here, title goes here. They didn't even title it. Oh, yeah, title goes here. That's the name of the file. Anyways, let's go here. Jessica Alba, this is why we should buy the company. And that's about it. This is a timeline, nice little timeline showing, oh, look at us. Look at all we've achieved and look where we're going. And right here, they're trying to do the sales pitch of look how much we have as potential when this is what they have as potential. But that little slice of the pie is growing very quickly. Of course, if you say clean and natural, you say that to a mom and you say, hey, would you rather bathe your baby in clean and natural or chemicals? And then the mom's going to go, oh, clean and natural. Because if you phrase it that way, of course, it's going to be awesome. But that's kind of like what that category is called. And then they have a market share from that. All right. So clean and natural growing 6 times faster. Conventional 1.5% growth, clean and natural 9.3% growth. Obviously, people are, if they see the word clean and natural, they're going to go for that. Just kind of like the organic ordeal. All right, so deployment process starts with the consumer, and then they're basically showing you the whole shenanigans of how they get there. Not really that important. All right, Total Baby, Total Honest Beauty. These are the different segments here. and branding. So again, this company is going to be basically focused on branding. Their competitors, you can think of them as Kimberly-Clark, Procter & Gamble, and the like. Jessica Alba right here in the center, you know, again, she's like very popular, you know, Instagram community and stuff like that, you know. And this is actually more important for the business, omni-channel approach. So the omni-channel approach is more of the modern business sense. You must be able to get to your consumers when they want you, however they want you. And omni-channel is the way to go. Okay. So that's a fancy way of saying we will sell it to you either direct, either through the retail. We'll be there wherever you want to be. We're there for you. Okay. Yeah, here, balanced omni-channel approach, digital versus retail percentage of sales. This is very important to actually keep track of. You want them over time to have more digital sales. However, digital sales is coming down a bit, which is kind of concerning. A lot more people are going into retail, which then starts to say that the power of the consumer is in the hands of someone else, like a Target or something. And then just as easily as they can come in is just as easily as they can go out. All right. Sales by product, skin. Okay. So what we kind of see here is the majority of their business comes from babies. Babies, and then skin and personal care second, and then household and wellness. This is a category that could grow later. Sales channel, retail is dominating right now. Digital is 49%. United States is clearly the dominant one, and international could get better, but we will see. 75% of Jessica Alba's Instagram followers are international. So they're trying to highlight, hey, we have an international growth opportunity. Cool, good for you. All right, this is major concern. Major concern if this continues, 22%, 13%. This slowdown should not happen going forward. All right. If it does, no bueno. Let's see here. Plant-based bag sheets, sustainability, harvested fluff pulp. All right, cool, whatever. Total billion. Okay, so market size, clean and natural. Okay, so 5% of total. All right, cool. This is their market share. This is very important to keep track of. So they are growing very fast, but take a look at off of what number that they're growing. They're growing off of a small base. So of course the growth is where it is. Personal care overview, household and wellness overview. Okay, cool. All right, this is actually interesting. Oh, this is really interesting. So this guy has Clorox and Burt's Bees, but Burt's Bees was bought by Clorox. So it's like same thing mentioned twice almost. Maybe he worked at Burt's Bees, and when Burt's Bees was acquired by Clorox, he was then like, oh, I work at Clorox now. So looking down here, just quickly skimming through this, they got P&G, Clorox again, Amazon, Staples, Ring was bought by Amazon. So another one that's interesting. They're just adding that in. Unilever. Yeah. Okay, cool. Merrill Lynch, Clorox, and then some banks over here. Cool. Clorox again. A lot of Clorox people, but that's all well and good. What is this? Okay, so this is a pat on the back slide. Pat on the back slide looks like, yeah, definitely pat on the back slide. They're so awesome. And then looks like another pat on the back slide. So I don't really care about that. Why invest in Honest? Okay, so the sales pitch. Let's see what they say. Clean and natural, millennial, Gen Z consumer. Sure, yeah. Large total addressable market. Yeah, sure. We saw that sales pitch. True omni-channel capability. Yeah, okay. This is actually really impressive. I'm not going to lie. Procter & Gamble, Kimberly-Clark do not have that to boast. Internal labs, R&D capability. Consistent growth across core product category, 95% of revenue. Okay. Yeah. Well, I mean, you're targeting the consumer staples. Okay, so that's fine. Significant margin profitability opportunity we see. Okay, yeah, but that's opportunity. The word opportunity, not surety. Okay. From here, let's actually head over to the model. See the valuation. Right. We checked it before. HNST. Honest. While I'm looking. Okay. Has it loaded in yet? It looks like it has loaded in yet. All right, taking a look over here. You guys can pause there and take a glance right there. All right, back here. Skimming through this, we're not going to ignore these because they're negative. Let's assume, okay, I'd actually assume this. Let's do unprofitable analysis. Yes. If not profitable, yeah, we're going to assume a 10% margin in year 6 and 15%. Let's assume this to be negative 2%. Okay, so negative 2%. I do think they're going to dilute. I don't think that they're not going to dilute. And this 30%, where is this coming from? We're going to use it from this one right here. All right. So we're going to assume that they grow at the highest end in the 30s. Again, they're going to be achieving profitability in year 6. If we change this and say it's going to be year 8 instead, it does worsen the scenario a little bit. And if we say they're going to achieve it beforehand, it does actually improve the scenario a little bit. So from what I'm gathering here, this is Obviously de-risked from where it was, but here's the key. When are they going to achieve profitability? I'm saying year 6, but they might not. And that would be a concern. So if you want, for example, higher margin of safety to account for that extra risk or uncertainty, you do need to get this at the prices listed here. So I would say that, around $1, I'd actually think that this is a very fairly priced speculative opportunity. The reason why I say speculative is that they haven't actually executed anything as of now. All right. Of course, right now you could speculate, right? You could say that they're going to grow at 20% and they're going to achieve profitability in year 6 and have margins of 10%. If they achieve 15% margins, then, we still get a little nicer story. How much will they actually grow by? I don't really know, but let's say they grow in on the high end of around 30%. We imply a fair value of 15.35 if all this occurs. But the question is if it will occur. I don't really know. So if we say they're going to dilute by about -3%, a little bit more, or then let's say -5% on the higher end, we can start to see that it gets a little bit more concerning as far as what prices we'd have to get and the assumptions we are making. The bankruptcy is basically not non-issue right here. Almond Z-score 5, and then the model's own metric is saying no. This is a small company. I do remember back when it was $1 billion, right? So basically what this is a case of something that has de-risked itself, not fully, but the risks have obviously come down. And that's, a natural lesson of all stocks. As the prices go down, we obviously know that the risk has come down, right? Doesn't mean that there's no risk, but it does mean the risk has come down. Of course, barring any substantive changes regarding the actual fundamentals of the business. Okay. So if we know that growth will remain low for the foreseeable future, that is very concerning. That is extremely concerning, because now we would say the fair value is about like $2.30 if the 13% is what continues going forward for here to the next 10 years. And then again, we are assuming 6% because 6 year of profitability, because if we say 8% and they only achieve a 10% on that 8th year and then going forward, so then that would not be good. That would give us a value of 48 cents on that 13%, implying that we must see some sort of growth. And again, I'm not discounting it to 20%, discounting it to 15%, and then maybe dilute it by about 2%. So I would have to see this price come down for me to participate. I think that right now, maybe it's a good entry point of a very small speculative position based on what I see here, because I can assume some dilution even on the 8th year of profitability and a 10% profitability rate. I can get the fair value presently at these moments and these two scenarios. Of course, the model is based on these probabilities is actually weighing it out more on here. Let's actually say we don't really know which one's more probable. It still says it's not really worth taking a position in at the present moment. But I'd say like it's not, I don't see it as insane as it once was in terms of taking a position here and now as a speculation. But if this is like a core position, it is quite interesting to say the least. That person would have to have a lot of certainty regarding the future prospects of this business and their ability to execute. But a lot has to go right for it to actually come out on top. This is, I guess, this is now considered a YouTube stock. Okay, so with that being said, will I be participating in this stock? Not really. I might take like a fun. I think I told someone in a live stream that I might create a YouTube position, and what I'll do is I'll weight it by some degree and put all the popular YouTube stocks in there, and then just count it as one position and just have fun with it. Of course, it'll be part of the speculative side of the portfolio. So I think the ones will be in there, like, will be all the classic YouTube stocks, and then just have fun with it, just as like a case study to see what happens. And then I'll actually add or redact positions in that basket, depending on what is added to the YouTube stock category and what is redacted from the YouTube stock category. So on that note, guys, I hope you guys enjoyed the video. If you guys did and found value in it, go ahead and feel free to leave a like. If you're not subscribed, go ahead and subscribe, and you can come back to the channel and we might be talking about a stock that you're personally interested in, and I can provide some additional perspective. If you guys have any questions, comment down below and let me know. All right. On that note, guys, I'll see you guys in the next one. Bye.